that's why we're just looking at data in terms of what the market's doing. What's outperforming what? Where are the asset flows going? Historically, what happens, during these conditions? It keeps it cleaner for us. It's very the changes in the market expectations for interest rates underscores a lot of the anxiety that we've seen this year, and I think that anxiety can be seen again in sector rotation, where nothing has really outperformed by any large degree, but the rotation has been fast and furious. Where our CEF model is, earlier this year, my son Jack and I, Jack and I work together. He's the one who helps me build the models. We were just kind of watching how fast these sectors go from a lot of money rushing into them to a lot of money rushing out of them. The poster boy for that this year has been technology. You'll see all the money rushing into technology for a couple of weeks, and then the next 2 weeks, it's one of the lowest ranked. In other words, the money was going out of technology to go somewhere else. Typically this year, it's been utilities. But that sometimes the market isn't quite sure of where to be. And when that happens, you see a lot of rotation. That's what we're seeing this year.
Well, to that end, do you ever look at the VIX in terms of when you see the VIX, is there any action there that kind of tells you, oh, okay, you know what? This is more expected that there's going to be maybe some of these faster rotations, or, I mean, we had that crazy spike in the VIX on August 5th as, the carry trade, Google antitrust, economic, I mean, there was just like a perfect storm of stuff hitting on August 5th that sent the VIX up to 65. Now we're kind of bumping our heads up against 20. That level, is there anything that you kind of gather from the VIX in terms of as a signal?
Yeah, we use the VIX as a tactical tool. In fact, it's one of the Asbury 6. So what we do on the VIX is we run a 21-day simple moving average over the VIX. And if the VIX is up above the 21-day moving average, it's a negative for the Asbury 6. It means that the monthly trend of fear, I guess if you want to call it that, is starting to elevate. If it's underneath the 21-day moving average, then that would be a green component or a positive component for the Asbury 6. But look how tight it's been. It's been really tight. It's been on either side. And I think when you see the VIX in this tight of a range, that's another indication of a lack of direction. You're not getting a trend in the VIX. The VIX is kind of staying right there on a monthly basis. So it's telling me basically the same thing that I'm seeing in other aspects of the market here. Is there's there's not a you don't have a trend in fear. You don't have a trend in volatility. And that is, I think that's part of the the situation we have in the market right now, where there's a lot of indecision. Even though the S&P 500 is up at all-time highs, there are signs of indecision if you look underneath the hood of the market. And I think this is one of them.